Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods, and today I want to talk to you about the top 10 mistakes that brand new investors make. Welcome back to the channel. My name's Levi. This is Drawbridge Finance. I'm not a financial advisor. I don't work in the financial industry, and I am definitely not offering financial advice. But I am a longtime investor. I like to share my knowledge, and I thought that it was prudent to have a channel that was for young investors and for seasoned investors both, because I was once a young investor and now I'm a seasoned investor. I've been doing this like 23 years, and I love it. Every single day I get up and I trade, and I love making money, and it's great. It's a great little hobby for me. And one day it will be my only source of income. One day, very soon. How many months away am I now? I'm 8 months from retirement. So you guys can do that too if you want to do that, because I really genuinely want people to make more money. That is my goal with this channel, and to build a community around trading because I love it. Anyways, today I'm going to get right into this top 10 things that new investors are doing wrong, in my opinion. This is an opinion channel. So I guess I'm going to do this like David Letterman, backwards. So we're going to start with number 10. The number 10 thing that I think that new investors are doing wrong is they're opening the wrong account. Now, when I very first started this channel, I did a video called The Only 3 Accounts You Need. I'll put a link down in the description for you guys to check that out. It's probably a little bit boring compared to my new updated videos, but it is the bones are there. It's a very important video because it shows you that you don't need a GIC, or likely don't. You probably don't need to buy any bonds. You're probably not going to buy any precious metals. Anyways, it goes through the whole list, top to bottom, of all the different types of accounts, and kind of crosses off the ones so that you don't screw that up, because there's nothing worse than like putting a bunch of money into an investment that's not going to pay off in the long run. All right, so number 9 on the list of the most common mistakes new investors make: not being aggressive enough. There is nothing worse than somebody who's just brand new saying, I've saved up this $1,000, or I've saved up this $2,000, and I know it feels like a lot of money. I understand that $2,000 is like everything that you have at that point in your life when you've got it. I remember when I took my first loan, believe it or not, to invest $2,000, which was good, bad. That's for a different video. But anyways, that first $2,000 was an incredibly large amount of money. And there is nothing worse than making a small amount of money, like $2,000, return a really poor return. If we're investing in like a GIC or a bond that returns a really low rate of return, it makes absolutely no sense. When you're young and you're starting off investing, you've got a lot of time on your side, so you can afford to be a little bit more aggressive with your trades. Don't be held back and go to the bank and say, "Oh, that's got to be a low risk." Like that's not the way to do it. Go for at least a medium risk, if not high risk, if you're young. All right, number 8 on the top 10 list of things people do wrong when they're starting investing, and that is not being willing to talk about money, being scared to talk about it. Like, don't be scared. It's your money. You want it to work well for you. Go out and talk to people. Find the richest person that you know that you feel comfortable talking to. You know, maybe it's like a family friend or a friend of a friend or somebody's parent or a grandparent or relative. Like, phone them up and say, "Hey, like, this is what I want to do. What are you doing with your money?" I hate when people are scared to talk about it. That's one of the reasons I have this channel. If you've got a question, there's so many people out in the world that are willing to give you information to help you. All right, number 7 on the top 10 list of things people are doing wrong. They go in and they blindly follow the advisor at the bank. You have to understand that when you go to a bank or credit union or any other type of investment firm, those people that you're talking to are salespeople. I feel like a salesperson a lot of times on YouTube because that's what I'm doing. I'm like selling my idea or my opinion, and very much so. But when you go to a bank, they are directly getting paid to sell you something. So when you blindly follow their advice without questioning it at all, you could run into serious problems, because their job is to make money for the bank, not to make money for you. Number 6 on the top 10 list of things people are doing wrong when they start investing: not doing the math. If you were watching this video, you are obviously watching it on some sort of computer Or phone, I know I have lots of views on phones. So if you've got a phone and you're at the bank, open up the calculator and use it. Every time I talk to somebody about money, I always just use my calculator. If I can't do the math in my head, use it. Because if you do the math, it will tell you whether or not that investment is a good idea. You would know that if you went to the bank and you sat there and said, okay, I'm going to give you this $2,000 and it's going to return 3% on a term deposit, that you are only going to make $60. $60 is not an aggressive enough return. It's not worth your time. It's easier for you to go out and get a job and make $60 than it is for you to tie up $2,000 and have that make only $60 per year. The math never, ever lies. So use your calculator. Number 5 on the top 10 list of things people are doing wrong when they're starting investing, not understanding the risks involved. There are lots of different transactions that you can do with your money, and there are some businesses that are risky than others. This is like really a common sense thing. If you've got like a friend that's telling you this is a great investment, just do a little double check and say like, is this really a good idea? If it doesn't sound like a good idea, or if the person can't tell you what the investment is, or if the bank employee or the advisor that you're talking to can't actually tell you any details, or you can't find the information that would tell you whether or not there's risks, then you can't make an educated decision. You need to understand how much the company is worth, how many shares there are. You need to have some basic information about trading so that you can make an informed decision. Having somebody say, oh, blah, 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 buy this stock, XYZ, and you just go randomly buy it is ludicrous. So you have to understand all of the risks. I did this when I was young. I invested in like some copper mine that I don't even know if the copper mine really existed. It was like money that I just gave to someone that I never saw again, because somebody that I knew that had lots of money was also buying into the investment as a speculative investment. What I didn't know is that he was putting in a very small portion of his money, whereas I was basically putting in all the money that I had at that time, which is really risky thing to do. Taking all of the money, say I only have $2,000, and investing that all in one spot. It would have been much better for me to invest in a ETF that was still aggressive, but was diversified across a whole bunch of companies. I always talk about this, looking at the SPY, which is the S&P 500 companies invested via an ETF that even pays a small dividend. It's a really easy way to get your foot in the door with investing, and it lessens the risks. All right, number 3 on my top 10 list of things young investors or new investors are doing wrong is paying too high of fees. Now, that seems like a no-brainer, but people do it all the time. They like sign up for the wrong account, as we talked about way earlier in this video, but signing up for an account that has too big a fee, or not actually doing the math and finding out how big that fee actually is. It's really easy to get sucked into some mutual fund that's like a 2.5% fee. Me personally, I never pay more than 1% of any transaction towards fees, ever. Number 2 on my top 10 list of things young investors or new investors are doing wrong, not actually knowing what they're investing in. I kind of talked about this earlier when we talked about risks, but this is like actually putting your money into an investment that you know nothing about. Do some research, figure it out. If somebody says something to you and says this is a good investment, look at the actual company, look it up. You know, one of my personal rules of investing, and you guys should memorize all 14 of them, because they're like my mantra that I follow day to day. If you don't understand it, don't buy it. Really, really simple. So just don't do it. If you don't understand it, don't buy it. Period. All right, the number 1 thing that new investors do wrong, in my opinion, when they're starting out, is they spend way too much time focusing on the investment relative to the amount of money that you have. If you only have $2,000 to invest, this is likely only going to return around $135 per year on average. So $135 is not that hard to make. If you work minimum wage here in BC, that's like just over 10 hours work. So make sure that it's relative to what you have. If you don't spend 20 hours trying to make $135 when you can go and have a job for minimum wage that pays you that same amount of money in only 10 hours, because it would be better for you to spend that 20 hours making twice as much money and then investing it. So when your account is small, just diversify, get it invested in something, then go out, get a job, get an extra job, work on the weekends, save some money, stop spending so much, and just put more money into the investment. Set up an automatic contribution and try to spend as little time as possible managing it. Let the market build up by itself while you focus on building your account size, because ultimately when you get into trading, you actually need some money to make money. I mean, that's one of the things about life. You need money to make money. And that's exactly why I have my channel. It's to help people make more money. Hope you guys enjoyed this video. Remember to give me a thumbs up down below. That helps a ton. If you've got any questions, leave a comment. If you want to comment on how glorious my beard is getting, feel free to talk about the beard below. I totally get it. I know that this beard is getting a little bit out of hand right now, and I'm going to take care of it soon, I promise. Anyways, thank you guys so much for watching, and let's get rich together.